Thanks for clicking. Russia launched its much-anticipated invasion of the Ukraine early on this morning.
Ukraine is under full-scale Russian assault. Explosions and air raid sirens have been heard in several Ukrainian cities.
While the US, Canada, and the EU are meeting and are likely to impose heavy sanctions almost immediately, it is unlikely that these sanctions are going to cause Russian President Vladimir Putin to retreat. While the war is unlikely to spread beyond Ukraine's borders, which we'll get into in a minute, it will have major effects for the global economy. With oil already surpassing $100 per barrel almost immediately after the invasion.
It's quite the upward trajectory here that we're still facing in oil prices until we get clarity both on the Russia situation.
We're definitely likely to see more and more higher oil prices as this continues. So what I want to do today is to talk about the short and medium term consequences for the Canadian economy, which is still recovering along with the rest of the world from COVID. Then I want to offer some predictions for the future and talk about what to look for next. This process is likely to last for some time, with Canada, the US, and Europe imposing sanctions on Russia, Russia responding, the US responding, etc., etc. So we're likely to have more and more effects on the Canadian economy as this goes forward. We'll obviously have updates on those effects. Click like and subscribe if you want to get those updates. But for now, let's get into this Russia invasion. The biggest threat to our economy from this Russian invasion, both directly and indirectly, is oil prices. The price of oil is a direct input on the price of our goods and the price to transport those goods. So, as the price of oil gets higher, so will the price of our goods, and this comes at a time when Canada is already at a 3 decades high inflation rate, sitting right now at 5.1%. With that said, I think the biggest threat to the Canadian economy from this Russian invasion comes in the form of interest rates with two very different risks, almost opposite risks. The first major threat comes from the Bank of Canada if it decides to operate as central banks have in the past. When we had the oil shocks in 1973, really throughout the 1970s, interest rates hit an all-time high in 1981, mostly as a result of the major inflation that followed these oil shocks and the central banks moving to clamp down on that inflation. OPEC was formed in 1973, and by 1974, the price of oil had doubled. So, when you hear about interest rates in the 1980s hitting 20%, it was very much largely a result of the price of oil doubling in 1 year in 1973 and 1974, and as we can see, it only went up from there. So when that price of oil went sky high, that went into our inputs, that went into the price of our goods, and our inflation went through the roof. After that, wage demands increased, etc., and we had to raise interest rates on a massive scale. The Federal Reserve and the Bank of Canada both had to raise interest rates in order to clamp down on that inflation. So, while the Russian invasion of Ukraine is definitely not an OPEC moment, not yet anyway, and I don't think it's going to get there, but it's definitely not an OPEC moment as of yet. With that said, we already have higher than usual inflation, and with some experts predicting that oil could hit $150 a barrel, that would be a 50% increase. This is obviously going to put major pressure on the price of Canadian goods, which will put more and more pressure on our central banks, on the Bank of Canada, to raise interest rates to clamp down on that inflation. Definitely not a good scenario. The second major threat vis-a-vis interest rates from this Russian invasion is almost the polar opposite of the first, in that the Bank of Canada will use this Russian invasion as a means not to raise interest rates. We are already hearing murmurings from the Federal Reserve, from some of the experts, that the central banks may need to reevaluate their timeline for raising interest rates, which most had predicted we would be seeing coming in March. As we've discussed in other videos, the central banks have definitely been late to the party in getting a clampdown on this inflation, as demonstrated by the inflation rates. 5.1 in Canada, 7.5 in the US, 30 and 40-year high. Obviously, the central banks were late to the party. And as we discussed, the reason for them being late to the party is that they're really in between a rock and a hard place, as we have so much government and personal debt that the central banks don't want to raise interest rates as it will hurt the economy, but at the same time, they have to get control over inflation. So, I think the almost bigger threat that we have from this Russian invasion is that it will be used from the central banks to delay the process of raising interest rates even longer. As we've seen, delaying interest rates even longer just leads to higher inflation, and eventually those chickens do come home to roost. We will need to raise rates to get a clampdown on this inflation rate. Delaying the process only will make it worse. It will make inflation go up and up and up and up if the central banks continue to wait too long to raise rates. If they use this Russian invasion as a means of saying, well, we can't raise rates right now because it would hurt the economy too much, if they go down that path, if they opt to kick that can down the road because of this Russian invasion, we're likely to see even higher inflation and we're going to see even higher interest rates in the future. They're just delaying the inevitable if they use this invasion not to raise interest rates. What to look for next, though? We've seen many in the media say that this war could expand beyond Ukraine's borders, that this could be a much bigger war.
This is as dangerous as it gets. This is the most dangerous moment in Europe since the end of the Second World War.
I think that is way overblowing the situation. Russia, 100%, I'll never say 100%, but 99.9% is not going to risk a war with NATO. If Russia risks a war with NATO, both the US and Russia have nuclear weapons, which leads to mutually assured destruction. They are not going to risk a war with one another. This is what kept the Cold War cold, in that the US and Russia never fought directly with one another, as no one wanted to risk a nuclear exchange. This is what kept the Cold War cold, and I think that is what is going to happen here. We are definitely going to be in for some economic consequences of this war. Who's going to suffer greater consequences, Russia or the West, remains to be seen, but I don't see this war spreading beyond Ukraine's borders. There's just too much to lose for both Russia and the US, and they've never directly gone to war before, and I can't see how the calculus has changed as of yet. But like we said, the economic fallout from this is definitely a reason for concern. One way or another, the price of goods is going to go up, and we're going to need to keep an eye on how the central banks respond to the price of those goods going up. Right now, with everybody recovering from our COVID economy and trying to ramp things back up, a higher cost of oil is not exactly what the doctor ordered.
You don't have to do that.
With that said, these updates are still unfolding. We're still getting more news about what the US, Canada, and the EU are going to do vis-a-vis sanctions with Russia. Whether or not they're going to be able to expel Russia from the SWIFT system, which is a discussion for another time, but that would be, I would say, the US's nuclear option, which again does not involve nuclear weapons. So we will have updates out on this as it comes out, as it's sure to affect the Canadian economy, interest rates, and probably house prices, I would assume. So click like and subscribe if you want to get those updates, and thanks so much for watching.